two to web three.
Hello and welcome to Let Fintech Grow. I'm Ian Horn, and today we're going to be taking another look at African fintech investment. I'm really excited to introduce today's guest, who is an absolute pioneer in fintech investment, investing through a gender lens. We'll get into that, and the co-founder and managing director of a Lagos-based private equity firm, Alitheia Capital. What's more, she's a former dragon on Nigeria's Dragon's Den show,
God.
a trustee for the
that.
Earthshot Prize, and a Yale World Fellow. Incredible CV. Tokunboh Ishmael, welcome to LFG. How are you doing today?
I'm doing well, and it's a pleasure to be here. And really thank you for inviting me, and I look forward to our conversation.
Well, no, pleasure to have you here. And I was reading off some of the things you've done. You are clearly one of the coolest people we've had on the show, and clearly one of the coolest people I've spoken to in the industry. So I'm looking forward to getting into so many elements of this conversation. But first, like, to give an introduction, I don't always do big introductions for people, but I think some context would be really helpful on who you are and what you do, because you've had a career that spans like software writing in London to M&A on Wall Street to Silicon Valley fintech, and then obviously Lagos, as I mentioned, in investment. Could you just give us a quick overview of your career and what you do today? Because that's a hell of a range of things to do, right?
Yeah, and without going into a CV as well, because that can be boring, can't it? But really looking at the threads.
Yeah, I'm glad you
I
said
spent
it.
most of my
Yeah.
I spent most of my career at the intersection of technology, capital, and market failure. And really, it was a case of I was software and hardware engineer in the City of London, and that taught me how systems work, systems thinking, and logic, and all of that. Wall Street taught me how capital works. I went to Wall Street after doing my MBA at the London Business School, and while I was in Wall Street was also when the internet boom and bust was taking off and landing, or crashing, I should say. And so that found me in Silicon Valley, where I could see how technology actually could reconfigure markets, not just from that micro view that I had as a software and hardware engineer, but really looking at markets and market failures, and how technology really is a solution, a tool, and not there for its own sake. So having looked at those threads, technology, capital, and market failure, I found myself in a position where at the height of the boom and bust, we'd sold an internet company in Silicon Valley. And I was then interested in the way that market misallocations could be corrected with VC investments, private equity. And so found myself looking to move to the next frontier, which is how I then landed in Lagos, Nigeria. So it seems quite disparate, but actually there's a theme of the intersection of technology, capital, and market failure, and really leveraging entrepreneurial ingenuity in the markets for opportunity.
Yeah, I mean, it's a hell of a career span, as I was saying. And I think that perspective is really valuable, though. I feel like you've ticked off almost every box across financial services, it seems. I mean, at least within a certain corner of it, which is still massive. So really interesting to hear that. I mean, but fintech, I mean, obviously this is a fintech podcast, and you were doing fintech, I think, probably before people were even calling it fintech. And that's what you were doing before you switched your focus to Africa. What made you realize that there was such a huge opportunity out there that you wanted to be involved in?
Well, it was less about fintech for fintech's sake. Again, when I say technology as a tool for solutions as opposed to technology in and of itself, it was more about what infrastructure is missing and what can the insertion of that infrastructure do to change markets and make those market failures abate. And, when you're in the UK, US, the West, you're in a mature market and often you're looking to optimize something that's existing with technology. When I found myself in Africa trying to actually invest in financial services and realizing that there were two parallel streams. There were the people that needed finance. There were the people that had finance, but there wasn't really anything that was connecting them. So, and we had seen where mobile access had become a bit more broadened, but we hadn't seen the financial access uh, going along the same trend. And really, it was seeing how technology could help that. So it wasn't let's go and find fintech. It was we need to solve the problem of financial services access and
Yeah.
how people move money around and what are those tools and infrastructure that can make that happen. Which is why I found myself, A, because I had obviously had the experience of technology, and B, because I was trying to solve this financial access issue in the, when was this? In the early 2000s,
Yeah.
and saying, actually, we can only scale if we use technology. And so it was really more about the infrastructure. And about that time, Paga was being started up, and it was a tool that really fit the bill, and which is why we found ourselves looking at how the Paga rails could address the problem of ordinary folk in Nigeria and Africa moving money around and unlocking access to financial services.
Yeah. I mean, actually, let's stop on Paga for a second, because what is it that you were
Yeah.
doing initially versus, what you do now? How has it evolved over the years?
Yeah. So Paga started out as a payment company, person to person, government to people, G2P payments, money transfers within Nigeria, bill payments. I mean, I remember the first time in, I think it was 2009 or so, when I made a payment from my sofa when I made a payment from my sofa on a Saturday afternoon, using my phone to pay for my DSTV. It was like, whoa, what kind of wizardry is this? Because even though we've been able to do electronic payments in the West, in Nigeria, that was not something you were able to do. And I remember moving to Nigeria and always forgetting to take cash out from the bank physically, not using ATMs for the weekend, and finding myself stuck. And here I was being able to transfer money to a service provider, which was very novel at the time. And I'm sure people now will be thinking, what's the big deal? It was a big deal in 2010 or whenever that was.
Yeah. No,
And now,
oh, go ahead.
and
Sorry. Yeah.
now it's moved to more of an infrastructure, a payments engine that is providing that payments as a service to other providers. So it's gone from just being a direct provider to providing the rails and the infrastructure.
Got you. Great stuff. It's funny though. I think my route into fintech has some similarities in that you just experience things that don't work as well as they should do, and you just see an obvious
Exactly.
opportunity around, like you say, bringing people into the system. I mean, financial inclusion, I guess, is what we'd say now, but it is just making sure
Yes.
things are, financial tools are accessible. That's certainly what brought my
Yes.
attention to it. Albeit I came at it from a kind of financial advice and wealth management perspective, which is where I'd been working previously. So no,
Yes.
just really, really interesting stuff, but it's been a massive opportunity for the longest time. And I think once people see it, it's hard to get out of it, right? Once you're
How
in
to get
fintech, it's
over
hard
it.
to leave. So
Yeah, but what I would say though
yeah.
is that financial inclusion was kind of like FinTech 1.0. And
Mhm.
now we're in this case of productive inclusion, where finance is being embedded in everyday tasks. It's being embedded for insurance. It's being embedded for paying workers. It's being embedded for the ability for electronic payments to provide goods and services without people being present. So it's moved from just bringing people into the financial system, but enabling them to be productive and to be able to receive payments and e-commerce. It's really enabled all of that to flourish.
Yeah, absolutely. And I also want to talk about, and actually correct me if I'm wrong here. I want to say Alitheia Capital. Is it Alitheia or Alitheia?
Alitheia
Alitheia.
Capital, which
Great.
is
I'm
Greek for
obligated to
truth.
pronounce at least one thing wrong during the podcast. So I somehow got it right the first time, and I should have just acted like I was confident, right? But Alitheia Capital, you're a managing partner there. You
Mhm.
co-founded it. You run a $250 million plus dollar fund, right? I'd
Well,
love to.
it's an aggregation of a number of funds over time
Oh,
that has
okay.
given us that AUM. Our
Got you.
largest fund today is just over $100 million in one pot.
Great stuff. Okay, yeah, so still a considerable sum
Yes.
of money for sure. But I'd love to learn more about it. But actually, I'd like to
Hmm.
start with the headline on your LinkedIn profile, which I think sums up your approach to investing really neatly. I think it says, "I've spent 2 decades proving a single thesis that capital deployed with discipline, fairness, and a gender lens doesn't just do good; it returns better." So, could you
Yes.
talk me through that philosophy and then what you do, Alethea, with that philosophy?
I'll begin by saying that it's not just about gender, it's about the mispricing and the misallocation of capital. Female founders are receiving less from the capital stack than their peers. And it's a case of an overlooking of certain types of companies and founders and sectors. So what we do and what that statement means is that we start with an investment discipline, and then we ask whether conventional sourcing is missing good opportunities because these female founders or female impacted businesses are being overlooked, and the sectors in which they operate as well are being overlooked. Are there blind spots? And so it's about the mispricing. And we say if a strong category of business is repeatedly overlooked, that under allocation can create inefficiency. And that's where we see opportunity. That's where we try and ram through opportunity. And we're not just going down the road that everyone is traveling, but we're looking on the road less traveled to find these mispriced opportunities. So gender is broader than founder gender ownership. It's also leadership, workforce, the supply chain, customers, and the kinds of products that need to come to life and meet demands. And so that's where we think about it. So, for example, we have a couple of companies in our portfolio, Real Fruit and Wemi, and they are local manufacturing concerns. Our money has gone in to enable those companies to scale. They were being overlooked. In Real Fruit's case, the founder there, a woman, was not able to raise funding for a long while until we came along and saw that there were aspects of this value chain that were being overlooked, and we supported her to build world-class manufacturing facilities, and she's now exporting products to the UK, US, Europe, and is driving on import substitution. Whereas before, in Nigeria, for example, we would harvest fruit and export that fruit and re-import it as dried fruit and nuts. She is now doing that processing in-house and tapping into global health trends of healthy snacks, and has created a whole category in itself. So local manufacturing, which has then also gone on to create jobs, quality jobs for everyone, inclusive jobs, and created value through export. So that's what we look at, those overlooked opportunities and drive for value.
Yeah, and I don't know if it's an easy question to answer or a tough one, but why is it that these businesses are overlooked?
Well, it is a tough question. Um, in some cases, it's a case of everyone, a lot of capital is looking at larger ticket sizes.
Mhm.
It's looking at a certain kind of large infrastructure projects or quick return, and it's sort of capital is less patient. It's not necessarily looking at sectors like feminine hygiene or aggregation of smallholder farmers to create a platform for exports. That takes time, and oftentimes also the female founders are not operating in the same spaces where the allocators are. And so they're not necessarily getting the opportunity to present their investment cases. And especially sometimes when they're much earlier than what people feel safe. Again, the misperception of risk, where people feel safer putting their money. So, but we're patient capital, and we're ready to roll up our sleeves to dig in on these kinds of opportunity. Also knowing that the opportunity for return is not just about what the company does, but it's also about improving the lives and livelihoods of the tens of thousands of farmers that are now providing the raw material that goes into these products, and ensuring that they're dignified jobs as well, because that in itself is a flywheel that begins to enable people to buy more products themselves and move up the curve. And you begin to have a more inclusive society where more products are available for the broader population and not just the privileged few.
Yeah, I think I love everything about how that sounds. I love that kind of long-term approach. It's always encouraging when you hear people talking about the broader economic impacts of investing beyond simple
Yeah.
returns. I think that's always, I think that's where the market eventually needs to go, right?
Just to your point there, that gender lens investing isn't about lowering the investment bar. It's asked whether the market has put the bar in the right place
Yeah.
or the wrong place, and how do we correct for that? So it's not charity, oh, we have to do it because it's fair. It's about ensuring that we're not mispricing and missing opportunities.
Yeah, I definitely think your framing was as an investment opportunity. That's certainly how it comes across to me. But let's focus on that for a bit, the gender lens, because this is something you've done for a long time now. And my understanding is that you, about a decade ago, you were challenged at an investment forum about the number of female-led businesses you'd invested in, and
Yes.
back then you hadn't invested in any. So could
Mhm.
you talk me through the realization and how that moment inspired your investment decisions moving forward?
Yeah. So what I at that point, I mean, I'd been in investments and sort of been working for over 2 decades, and I thought I was being fair with all my investments. And then I realized that actually that the absence of discrimination is not necessarily the presence of inclusion and a broadening of opportunity. So for me, it enabled me to see that intentionality is important, to be able to see overlooked opportunities, and that just being on the same hamster wheel and doing the same transactions as everybody wasn't necessarily opening me up to the broader opportunity. But also I'd allowed myself to sort of be blindsided in the same way that majority of the market had been looking. And so I began to look outside existing networks. I began to look out more broadly, and began to sort of look more broadly at sectors. I mean, agriculture is the largest employer. Agricultural sector is the largest employer in Africa. So began to look at that sector, thinking, what would it look like to solve problems in this sector, and therefore solve problems for more people who themselves become consumers. For the longest time, we would say the Africa story is a consumer story, and then at some point it's like, oh well, it's not because there aren't as many consumers. Well, if people are not getting jobs, they can't become good quality consumers. And so it was looking at that sort of broader perspective and saying we need to redesign the process and ultimately think about a thesis around the overlooked and systemically mispriced universe of opportunities. And we were very clear that this is not CSR.
Yeah, and I want to talk about African fintech on the whole, as broad a market as that
Mhm.
is, pretty soon. But first, I've got two kind of quick questions for you. The first is, of the investments that you've made to date, are there any in particular that you would say you are like the most proud of? Is there anything you look back on really fondly?
Well, it's quite interesting because I've done a number of tech transactions, fintech, embedded tech. Um, and the interesting point is that the one that I look most fondly on is not a tech investment, or investment, oddly enough. I'm proudest of an agribusiness company called Saltree, where Saltree is processing raw cassava and turning it into its industrial processing and producing starch, sorbitol, and other derivatives of cassava. Now, many people don't know that they've all used sorbitol today, and they use it daily because sorbitol is in your toothpaste. And so being able to support a founder who, by her own admission, spoke to over 100 investors until we came along and funded her, and take enable her to take her business, which was a small house location, a room in a small house, to a world-class manufacturing facility that is also now producing derivatives for glucose, for hydrogen, which it's selling. It's producing a large market for that, and driving on import substitution, because these products, sorbitol, etc., were products that needed to always be imported, and now you can get that locally. She's supplying local manufacturing concerns, and she's exporting cassava flour to the US, Europe, and tapping into, again, to the global health trend where people are looking for gluten-free products, of which cassava is one, and looking at these healthy products. So it's a whole value chain of products and export that she has been enabled to produce, but also on the back end has enabled tens of thousands of farmers to move from thatched huts to concrete homes, and because we've also been intentional about energy transition, climate adaptation as a lever for value creation, she's also able to not only light up her factory and keep the lights on and keep the processing and productive capacity stable, she's lighting up over 5 communities and improving the lives and livelihoods for all these farmers who previously were wasting their yields. They weren't seeing full acquisition of their farm yield. And now here they are, part of a value chain that is solving somebody's gluten-free problem in the US. That kind of thing excites me. Now, is there tech in there? Absolutely. Because you need the tech to connect to the buyers, to connect to the farmers, to enable the payments. This is again where I'm saying you go beyond inclusion and you go to productive fintech, and not just about financial inclusion. Also, it's putting Nigeria on the map as a producer of this cassava derivative, and tens of farmers are seeing an uplift. So there's tech in there, and there's also climate adaptation. A whole solar farm has been put in to stabilize this factory, take away the colic behavior of bad grid power, and at the same time light up communities. So, it's really one that I'm proud of because it touches on so many different points. And now Saltree is processing over 400 tons a day, and has that processing capacity. So yeah, that's one that really warms my heart.
That's a great example. That's really, really fascinating as well, just to see the broader impact of it as well, and not just the scale of the business. That is so cool. I mean, let's look at African fintech generally though now, because that's what I
Yes,
want to talk to you about. On the
yes,
we could talk about a million and one other things, I'm sure, Tokunboh. But
yes.
I would like to know, speaking to a European guy that doesn't know particularly a huge amount about African fintech, what would you say are the biggest opportunities you're seeing in the continent right now?
Yeah, so for me, the biggest opportunities are around really the infrastructure that will enable us to um, be not just inclusive, but drive for productivity. We're seeing embedded fintech. Max, which is one of our companies, is a useful bridge. It provides finance and income generating assets, green, one, two, and three wheel and four, sorry, two, three, and four wheeler vehicles, mobility, jobs, and productivity. And it's able to do that because it's got an embedded tech platform that not just provides finance, but also enables connectivity for all these drivers and tracking. We're also seeing a lot of fintech opportunities in the SME credit space, cross-border opportunities. One of the portfolio companies in our broader um, partnership engagement provides cross-border and is driving for financial services to be as easy as making a phone call, a WhatsApp call. And so these are, again, making it easier for e-commerce to happen, for mobility to happen, for people to be able to pay their bills more efficiently, move around, for business and the exchange of goods, because now you can have that cross-border transaction happening more easily. So we're seeing a lot of that embedded finance. Um, Obviously, savings, B2B payments, asset finance, all of these are now readily moving as products into the tech space. Um, yeah, so we're investing in markets for us and not just on the continent. So we're not saying that this is the fintech opportunities are all over Africa, but we're seeing concentrations in those key markets of Lagos, Johannesburg, Nairobi, and even across Kenya and crossing into Zambia, where we have a leading edge in an investment in a leading edge fintech microfinance bank that is purely tech driven. So we're seeing this, spread into everyday life where the financial infrastructure has matured and the embedded fintechs are enabling people to live their lives and go about their productive work more efficiently and quickly.
Yeah, and what would you say are the biggest kind of challenges that African fintech founders are facing right now? I mean, we've had previous episodes where people have talked about the relative difficulty of raising capital, for instance. But is there anything else we need to know about the continent that would help us understand, where a founder's coming from in Africa?
Yeah, I mean, we still need to uh, have enabling environment and the ability for people, the ease of doing business. And fintech runs on tech runs on digital infrastructure, which runs on power infrastructure. And so there's a lot to be done with respect to the energy, the power infrastructure, what drives and ensures that we have reliability and connectivity, that ensures that when a transfer is seen as done on one end, it is seen as completed on the other and not hung somewhere in between, not in the originator's account and not in the destination account. So people are still dealing with reliable infrastructure. We're still dealing with ensuring that the regulation keeps up with the innovation. So that is an area that we need to see more happening, and we have been seeing activity, and we have been seeing the regulators try to keep up with innovation that's happened. We've seen lots of sandboxes and even moved beyond that. We're still in the early stages of fintech, I would say, even though our first investment was back in 2011, because we're still putting in the infrastructure, and we're still putting in, and we're still looking for that reliability and the maturation of the regulatory environment. We still need to see more a broadening of financial products, and not everybody focused on transfers and payments, but begin to look at, a real insure tech opportunity that can scale and provides that kind of protection for someone who's a company that's taken advantage of the free trade continental agreement, wants insurance across the 52 countries on the continent, and you often want your insurance to travel with you. And I think that a tech-driven insurance platform can also help people to have that protection, but also better take advantage of the Continental Agreement. And talking about the Continental Agreement, that can only really work if we do have robust tech infrastructure, digital infrastructure for the payments of services. And of course, we need to address challenges around FX transfers. And we're beginning to see some solutions that are coming in that are enabling speed and efficiency around cross-border FX transactions using the embedded fintechs.
Yeah, and look, I've got so little time left for the rest of this interview. So a few quick answers. I mean, firstly, how, in European fintech, there's a lot of conversation right now about stable coins. Is that something that you're tracking closely? Do you think that's going to play a big role in the future of cross-border cost and fintech in Africa?
I certainly think it will play a big role in cross-border costs, bringing down those costs, and not just cost, but efficiency, reliability, and ensuring trust along the way. But for me, I'm more interested in understanding how an SME can leverage it for, again, being able to push hard on the continental agreement, how they can receive and pay for goods and services, and less about whether it's fashionable. So for me, one of the key problems I've mentioned is on foreign exchange access. There's also the treasury management aspect that I think that stablecoin can play a key role, and efficient cross-border settlements. And so any investor that's like me, that's looking at at the space, is thinking, are the customers real? Is a solution economically superior to what's currently out there? Because, people will always find different solutions, and cost of the solution also plays a role. Is the regulatory framework ready for it? Is it something that we can see underwriting in? That being said, Nigeria is one of the largest players. I think about 60% of sub-Saharan African stablecoin flows are happening through Nigeria. So we're seeing more use cases, and we'll see. Suppliers are beginning to tap into that, and for remittances and these cross-border payments.
Great stuff. There's another thing I need to talk to you about, which is, I mentioned at the start, you were a dragon on Dragon's Den Nigeria, which I think is the coolest thing. We actually had an interviewee a few months back who had been on the other side of it, who had pitched their fintech to the UK version. So I'd love to get your thoughts on this. I mean, when you're trying to assess a business in a short space of time with the cameras on, what are you looking for exactly? Like, when people are pitching to you, how can they stand out?
Yeah, I mean, you're starting out with the founder. Can you work with this founder? But that's not the only thing, right? Can you work with this founder? Does the founder know the business and the opportunity? Have they done their homework? Do they know the customer from evidence rather than just placing it in their deck? Does each additional customer make the business stronger or just bigger? Do they understand this? How does the presenter, because it's a short time of period for you to assess. So you're really starting with the founder and their knowledge and chemistry as well. There's got to be some chemistry. And does the founder even understand where they might have some weak spots? So founder self-awareness and how quickly can they learn and adapt in the face of troubles, which will come. And also understanding that whether the founder knows that if their idea isn't the one that works, but that they need to pivot, that they're ready for that kind of pivot. And you can see that in their ability to take on some of the feedback and interact with the investors on the panel. But for me, I don't confuse a polished pitch, which, you're coming onto TV, you get a polished pitch. That doesn't actually make it a good business. And at the same time, a bad or imperfect pitch is not necessarily a bad business.
Yeah, it's really fascinating. You're trying to assess the character of the founder as much as anything else. I mean, how do you do that? Are you doing that on gut feel, or do you because I'm guessing you don't have time to research the people that are coming in, right?
No, there is a lot of gut feel, and so you're trying to, and you're listening for cues. And I find one of the most interesting parts of the interaction when the negotiation is going on, because you can see how they're interacting, how they're declining, or how they're accepting, and what's motivating them to move one way or the other. That gives you a good sense. It's not complete, but it's a good start.
Great stuff. And last question for you, which is that you're a trustee for the Earthshot Prize alongside Prince William and Jacinda Ardern and others. What company, by the way? For those unaware, the Earthshot Prize is set up to tackle the world's greatest environmental challenges, and its 5 stated Earthshots at present are to protect and restore nature, to revive our oceans, clean our air, build a waste-free world, and fix our climate. Now, I've just experienced, and I'm still experiencing, a UK summer with no air conditioning, and I need some hope, Tokunboh. I need some hope, like genuine hope as well, rather than just aircon, which is nice, but it's not going to cut it in the long term. Can you talk me through like one of the ideas you've seen that's been inspiring?
Oh gosh, there's so many. I saw one recently. Well, first of all, there is hope. We're not just waiting on magical innovations to appear. Solutions are being invented, and many already exist. It's a matter of how do we scale these or replicate them across different regions. There are a couple that, and I'm going to get myself into trouble with a number of these innovators now, but there are a couple that really touch me in the clean air category. A simple solution, Mukuru cook stoves, which is saving, hundreds of thousands of children from dying from the air the polluted air from wood burning cook stoves, because their mothers are now swapping out for clean cook stoves. And it's an area that at Alitheia we had already been working in as long ago as 2012, when we created a clean cook stove facility. Yeah. And it's a simple solution, but one that's saving lives every day. That's one. There's so many of them. In the interest of time, I'll just mention one other one, which is close to my heart, and it's Lagos Fashion Week in the circular economy. And these are the African opportunities. There's some global ones I haven't mentioned, but Lagos Fashion Week is taking a sector where all of us spend money and a lot of times waste money, and looking at how we can be more circular with the clothes that we wear, how we can repurpose our clothes, and how runways are not just promoting the idea of buy and waste, but reuse. So, and clean dyes and materials, new sustainable materials. So those are just two, but if you permit me with one last one.
Yes, of course, please, yes.
A company called Matter that is creating filters, microfilters, for washing machines and other large industrial machines, and it's able to pull out the plastics with this filter. I'm probably not describing it well enough. And it's now a simple innovation in a washing machine. I say simple, but it's patented. That is enabling the plastics to be removed from that wash cycle, and is now seeing industrial use with large scale manufacturers. There's so many of them. And that is taking plastic out of our water, out of the system in our homes. And there's so many that I could mention. But the key thing is that, solutions do exist. And our job as investors is to get capital to them at the point where proof can become scale.
Amazing. And so good to finish with some hope. That was really encouraging. And I know there's so much more to do, but it's really great to hear that. Tokunboh, thank you so much for joining LFG. I've had a lot of fun talking to you and learning about what you do as well. As I said at the start, what an incredible career. And I'm really glad we could share some time with you. And I would love to have you back on again at some point. So look, thank you so much.
Would love to come
pleasure.
back.
Oh,
Thank
well,
you so much, Ian. I look forward to our follow-up.
Thank you. Well, let's make it happen. And to everyone who's been listening in, thank you for joining LFG. I'm Ian Horn. It's been a pleasure, and I will see you again soon.
Raising funds, speaking the club, drinking coffee.